All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is August 4th on a Friday, 2023. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. If you haven't already, make sure to hit that subscribe button so you don't miss any videos. Yes, I will be doing a recap video of the week. We're going to talk about this week, what happened, what worked, what didn't work, and what we can learn moving forward. So, hope to see you there. And if you don't want to miss that, turn on notifications on your subscription on YouTube so you don't miss it, because it will not be live. The recaps are recorded and posted. So again, thanks for taking the time to join me today. Dow futures up 65 points, NASDAQ up 88, S&P 500 45.40 up 0.40. Russell is slightly green, 1971. Dollar index is down 102.11, down 0.42%. Volatility index, the VIX. The VIX on Friday, I've noticed, always gets slammed. 15.29, down about 4%. Crude oil, 82.05. We do have the crude meetings, OPEC meeting today. I saw a headline this morning, and I went ahead and posted it on the blog talking about no expectations of change. I'll read you the exact headline. OPEC plus JMMC meeting starts, no policy change discussions on agenda. That's according to Reuters this morning. Gasoline futures up 1.5%, $2.80. Gold futures starting to bounce. Thank you, dollar. 1977, up 0.43%. Silver futures up marginally, 0.10%. $3.86 for copper futures. That's down 0.88%. Taking a look at Forex land, not much to do. 109.97, up 52 pips for the euro dollar. Dollar yen, 142.09, down 44 pips. Pound dollar, 127.43, up 33 pips. Bitcoin and Ethereum relatively flat, 29,360 for Bitcoin futures, 1847 for Ethereum. We know our targets. We're waiting for 35,000 on Bitcoin and 2,000 on Ethereum for us to get at least somewhat excited. All right, good morning. Glad to have you on board. My apologies on yesterday's audio. I think I figured it out. I had CNBC streaming on my computer while I'm working. On TOS, it's included. Thinkorswim has on the actual desktop platform, you could just put up Trader TV and you have CNBC. The problem is that I was doing a live while it was playing, so it messed up the sound. That's why you didn't hear me yesterday. So I went ahead and fixed it. We're all good now. Again, glad to have you on board. So let's talk about the non-farm payroll number. Let's take a look at it rather quickly. We're going to go to our blog, live market blog. If you haven't joined already, we'd love to have you on. Here it is. U.S. change in non-farm payroll reports 187,000 jobs added. Expectation was 200,000. Unemployment rate 3.5%. That is down from 3.6%. Average hourly earnings ticked up month over month, 0.4%. Average hourly earnings year over year basis 4.4%, 4.2% expected. So hourly earnings are going up while inflation's going down. That's a really good sign for the consumer. We want to make sure that we keep that trajectory. But for the most part, right now, this week has been really just a choppy week. So again, I really want to bring up the seasonality. And again, we just started. We just fell earlier this week. We got a little bit of a bounce, probably yesterday's bounce. More than likely, we'll probably pull back, if not just bounce a little bit again. And then we'll get a little bit of a pop midweek, next week, possibly. Maybe we get that CPI being a little better than expected, and then another pullback. And then towards the end of August, we get a little bit of a bounce based on the seasonality. Again, this is on pre-election year 2023, based on the 59-year range up until 2009. So this is what we got, and this is what we're expecting. Again, more chop. Let's go to S&P 500 futures, if I can get my thing going here. Let's see here. S&P 500 futures, we're going to go ahead and expand it. And again, not much to talk about. Nick talked about this last night on his video for the team premium members and masterclass. We're below the 20, yes, but again, never broke 4,500. So see if we can break above 45.55. That's your 20-day moving average. This week's close will be extremely key. So again, where do we want to go is the question. We're above major moving averages on the weekly. We haven't had a red weekly loss on the S&P since the beginning of July, which was the last time that we had pretty much a rough month in trading, a rough week in trading, excuse me. And that's where we started going, pushing and end the month very, very strong. So again, just really means on what do we expect moving forward. And we did get a relatively mixed but positive NFP, at least in terms of price action now. What's changing now is that we had some earnings. So let's go over Amazon first. Amazon, and I was talking about it on the blog. I said that I thought Amazon would pull back and Apple would pop. Completely opposite happened. I did not trade it at all. Amazon is up. I have puts for next year. Imagine. So that was a hedge, and I'm probably going to have to close that because it's the 110 puts. I don't see us getting down to that level when we're getting this breakout here above 136. Looks like we're going to test 146 into next week. We'll keep that an eye for our watch list for this week. So on a Friday, we don't want to really do anything more than we have to in terms of same day expiry. Hell no. But we want to kind of set ourselves up for next week and come back stronger for it. So Amazon had a great quarter. They cost cutting and cloud. Those are the real main two drivers. Amazon Prime was a good revenue driver, but for them, it's all about cloud. And the fact that Microsoft pulled back a little bit on cloud and Amazon did well means that they're gaining market share. So this is why you're getting that pop in Amazon, trading at 140 right now. I don't want to chase it here this morning. I think I'd rather just watch it, maybe get out of those puts, even though they're for next year. I mean, I don't see us falling 20% on Amazon or 25% within 12 months. It's probably not going to happen. So rather just close it. Hey, it was good insurance policy. I'm just glad I didn't crash the Ferrari. That's what you have insurance for. You don't buy car insurance hoping your car crashes or your car gets stolen, mind you. Apple, read the quarter. Again, revenue is declining. Apple iPhone sales missed expectations. That was kind of expected in turn because of the super cycle or lack of a super cycle. We get the iPhone 15 in September. Citibank posted a note regarding that to buy Apple ahead of it, expecting a strong showing of their new iPhone, which will be in September. In terms of Apple here, I know there's a question here from Joey. Good morning. Let's get right to it. Levels to buy the dip on Apple calls. I don't think there's anything here to do on Apple, and that's really kind of boring. And I know that's the case. Remember, the all-time highs, guys, were 182. 182 was the all-time high. So if we kind of retest 182, maybe you can get started, but we have a gap to fill here at 175.64. If we're expecting a little bit of a pullback ahead of the iPhone release, get some volatility of August, the dog days of August, that would probably be the level I'm looking for, 175.65. A retest of the breakout would be completely natural and normal. That's really only $3 from where we are. So again, that might be holding on to support. We are now below the 50-day moving average. This is the first time we've been below the 50-day since the 24th of January. Now let's take a look at Microsoft, which would be a tech peer comp. We have a gap to fill here at 316.46, and we're below the 50-day moving average again. And that's the first time we've been below the 50-day moving average on Microsoft since March. So is there anything much to do here? No, because we have CPI next week, and we have an inflationary data. So again, we're going to see exactly how inflation has been rolling still. We do have that big July data in terms of CPI. So it should come in better than expected only because of that because of that peak number in July where gas prices were at the peak. We're going to be reporting July CPI numbers. So that would be the last of the tall data that we can kind of use in our favor if inflation is accelerating lower. But that's going to be next week. We'll go over that in our video at the end of the session when we talk about the upcoming week. Uziel says, good morning, Carlos. Buying Amazon weekly with recent spike got me thinking. At what level would you stop buying weekly and just let it ride? It's a long-term investment for me. Thanks, man. I would say just hold on and just dollar cost average. Don't even look at it, because if you get a dip, you're going to get a better price. If you get a sore job, you're going to be up in profit. But if it's long-term, it really doesn't matter. Amazon is a great company. We know that. Yes, there's volatility in the markets in shorter time frames, but the longer period that you have, the easier it gets to invest. So remember that. BTC thoughts, not much to do on Bitcoin. Coinbase had a good quarter, but Bitcoin, until we break 35,000, there's really not much to talk about. It's really just chopping around, and that's really much in the dollar. Good morning, Carlos. How come the market is going up while Apple, the biggest company in the market, is going down due to earnings? Well, when you have Amazon up 10%, that's going to kind of help NQ. The high betas, bookings.com of the world, football TV of the world, they did pretty good on their earnings as well. I think Airbnb being the only one that was kind of down this morning. Let's see if we can look at some pre-market movers together. And then, yes, Apple is important. Don't get me wrong. I'm not going to sit here and say it's not. but it's not the whole market either. And the fact that it is down this morning and the Nasdaq is relatively up is actually something nice to see. It shows that we're not so dependent on a phone company that used to be a computer company, which I love very much. Football TV up 20% this morning. Yes, I own shares, but yes, it's down big. Nice to see it pop, but nothing has changed. You just have to wait that out. Apple down 2.89%. Microsoft up 1.42%. So again, that's going to help Nasdaq. You can see here that Tesla's up 0.84%. Lucid, Nvidia, big part of the QQQ, up 0.80%. Datadog up 7.5%. PayPal bouncing. So again, you're starting to see that it's not just Apple that's kind of running the show. You could see obviously Apple being down nearly 3%. But the other NASDAQ stocks, the big mega caps, are doing okay, and they're kind of holding up. So that's really the only reason why we're just chopping around here. Until the S&P breaks above 45.55 and closes above it, I think you're just kind of staking where you are. Knowing the VIX and where we've been, if we break 45.55, more than likely, guys, we're just going to fill this gap to 45.97 either today or into next week. And again, we're just going to retrace all of the loss from that Fitch downgrade. And again, I'm going to go into more detail onto that on our video later today. But again, all of this is chop, and we just got railroaded based on a headline on a credit downgrade from an 850 credit score to an 820 credit score on the United States. Mind you, the only credit agency that actually downgraded the US. It happens. Nothing you could do because that happened after the fact on Tuesday. Name of the game. Levels of Meta to buy calls. Let's take a look at it. Meta, I need to break above 330.50 in order to buy calls. If we break that, then yes, I would look for more upside. Still above the 20-day moving average on Meta. Sure, we are due for a little bit of a pullback, but not much as of yet. We had one back last week on their earnings, bounced above 290. So again, we'll say 290 is our support for now, but in order to go long, you need to get above 330. That'll clear here and get us to 353, which would be right around the September 22 highs, which is no, actually, it would be the November 2021 high. So, gonna have to wait. Not much to do here unless we get that VIX smash and we start getting some gaps filled on ES. ES at 45.96. There's an hourly gap fill there, and that was from, of course, the downgrade. Same thing with NQ, 15.798. That's gonna be my target for more upside. We need Apple to bottom out. Obviously, it is breaking the 50-day. In terms of support, we know what it is. It's right around 183. That was the previous breakout. So previous resistance becomes new support on Apple. That's what we'll be watching. Again, we didn't trade it or anything. We just were watching it. And Amazon did well. Apple did not in terms of price action. But does that really mean anything at this very juncture? Not really. So 183 being our support target. Maybe we start taking a look at buying some calls there and go from there. But yeah, it's unfortunate that we just get those news headlines, kind of hits us. This is something that I'm used to now for the past 9 years. Headlines just happen. You can plant your crops, you can be prepared, but sometimes it just rains and then there's hail. That's just the way of the world. Is it frustrating? Yes, but you just kind of have to roll with it. Next week's a new week, but we'll see what we can do today to see if we can catch back some of the tougher trades that we had this week. Got hit due to that downgrade, but it's really just going to be a wait and see game. Again, nothing has broken. S&P and NASDAQ kind of in a holding pattern. Again, if we do break that 20-day moving average, 45.55, we may get to 45.96, but NFP is done. We're kind of running out of catalysts. We have CPI. There's no Fed this month. Yes, we do have Jackson Hole. We have Nvidia looming in terms of earnings, but that's like the last of the biggest mega caps left that are really going to be market movers. So again, dog days of summer. We know what it is in terms of seasonality. Let's not get too impatient either. We had a really great July. We don't want to give anything away. Step by step, we'll get where we need to go. In terms of Caterpillar, from Joey asking when is a good time to buy calls. You want to get above 293.88 as well. I like industrials here, but there is also a gap to fill at the previous breakout at 265.47. So we could get a little more downside on Caterpillar before we bounce again. And again, it's really just based on the seasonality of August. August are the dog days of August. Just not a lot of action, just a lot of chop, a lot of volatility. So that's where we are, guys. I wish I had better news, but we just have to roll with it. More than likely, we're just going to be watching. I don't see anything other than us breaking 45.55 to that gap fill to 45.96 that is anything even remotely enticing here. I don't want to chase Amazon to the upside, and I certainly don't want to chase Amazon to the downside. We're just going to let things roll, kind of just watch and see where we go from there, guys. I wish I had more fun news for you, but if there was a day to take a day off from the market, more than likely it would be today. You just take the day, enjoy your early weekend, because I don't expect us to do much. It seems that we're just kind of just staying put between 45.10 to around 45.50, we'll just say, or 45.45. Not exactly a lot of action to play with or to trade with. It happens more times than you know, guys. So we'll go ahead and leave it there. I will recap the week. We're going to talk about everything that happened, Forex, futures, options, how we did, what we did, what we didn't do right, what we did right, and see if we can learn from it moving forward and get us prepared for the next week, because this week, what can I say? Really, since that downgrade, that was the big move down, and we've just been chopping around since. So let's see if we retrace those gains, get us back to flat for the week. That'll be at 46.23. That's a tall task. We're right around 89, 88 points away from that, but I have seen this happen before. How can I tell you that with certainty? Because we had that in July. So let's go to the hourly just to kind of give you guys the context. And this was, let's see if I can find it. This was early July. This bound, let me see if I can find this on the daily. All right. Daily July, you could see here, got that pop here in July 3rd. And this is where we fell about 98 to 22. So that's about 70 points from 46.22 to around 45.17. That's about 100 points. That's the last time we had this drop, and then we started bouncing from 41.11 to around 46.07. So 44.11 to 46.06. You're talking about a 200-point move after this bear trap here. Could we be getting that? We need to see if we can hold 4,500. Until then, you're really just waiting for that 20-day moving average to break and see if we can retrace. So none of this is new. You could see even in the mid-June, we had about 5 out of 6 sessions in the red, and then we bounced and kind of just chopped around. So you could see even in April, same deal, chop, chop, chop. We're just getting that now. Sometimes you catch these big moves. Sometimes you get this continuation. Sometimes you don't. The idea is when you get the continuation to hit it, and when you don't, you hold on to your chips, you hold on to your capital, and you wait. So that's what we're going to be watching from today. Moving forward is 45.55, and see if we can break 15.550 on the NASDAQ. So we'll leave it there, guys. Have a great rest of your day, and I'll see you on the next video later today, recapping the whole move, the whole day, the whole session, and the whole week. See you then, guys. Cheers.